Well, it was an encouraging day on Wall Street for the bulls. We do have some buy signals that look to be flipping, at least on some of these signal charts, but we need to proceed with caution moving forward. Everything, as far as the 11 sectors, were up in the greed. Financial really led that battle. S&P 500 was up almost 2%. You're watching the Stock Market Brief Show. My name is Michael Silva. This is a show where we use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. So what buy signals are flipping that I'm talking about? Well, first and foremost is the summation index. Now, the summation index has not fully started curling back up from these overextended areas. However, between the parabolic SAR and the summation line here, it does look like we're about to get some sort of a turn. Now, we've gotten turns in the past, but keep in mind it could run flat for a little bit longer. We'll see here in the next day or so if it flips down over and we start getting some sort of trend or momentum to flip to start heading more towards the upside. Now, if we continue on, another indicator is the Pring bottom fissure. Now, the Pring bottom fissure is flipping over to bullish as it stands right now, where the 10-period moving average is now below the Pring bottom fissure indicator. And when this takes place, you could typically see shifts in momentum or bottoms found. Now, I typically like this stretched down a little bit further. And, it's not always 100% accurate, but it is showing us a little change. Now, we did almost have it flip here, but it continued to head lower as well. So this may be signaling us a little bit of change in potential momentum to the downside. We may go into consolidation. We very well may just continue to rally up higher, as we saw a pretty decent move today. There is an interesting chart that was pointed out by Brian Shannon, and he was using the anchored VWAP on the COVID low. And the COVID low I'm looking at is on the S&P 500 chart. And when you do that, the anchored VWAP, which is the average volume, or it's a volume-weighted average price. So it shows that, the average person that bought from this point is basically flat even, okay? And based off of the volume or based off of this indicator. Now, you can see we tag this, and it doesn't always act as support or resistance, but I want to call out that this line is clearly something important we're starting to see a bounce from. So I wanted to add two more anchor VWAPs, and that brings up to this peak, which was the all-time high, and this prior swing high too. That brings us to around 4238 to 4358 as far as resistance goes on the S&P 500. So that means if we do continue to get a rally and it bursts up after seeing 7 weeks to the downside. I think the Dow Jones, by the way, had 8 weeks to the downside, which we haven't seen since like 1932 or something crazy like that. But if we do start moving up here, that does match up with prior support, and somewhat prior support there. So if we come up here, it's probably going to continue to be sticky there. And if that is the case, keep in mind that's still a high, a lower high, and another lower high as we're putting in low, low, and lower lows. So the trend still remains very bearish. So as these indicators that I'm talking about are flipping to bullish, understand that the trend still remains bearish, right? It's going to take more than a day to fix a trend like this. Now, in the after-hour session, Snapchat got hit very, very hard, and it's down around 30%. And you can see here, the futures are not liking that as of it stands right now. Now, we'll see what happens, more towards the open. But NQ, which is, Nasdaq futures here, it's down 1.32% already. And then the S&P 500 is down almost 1%. Now, a big mover today was the dollar. The dollar took a pretty big fall, down 1.04%, coming back into 102. I still am more bullish the dollar given the context of the chart, higher highs and higher lows. And if you do really zoom out, I've shown this chart prior, but we broke out of a 7-year plus channel and we're coming up into prior areas of resistance. So it's typical to see, things break out and potentially get back test. Now, this could very well come right back into the middle of the channel. Like, we can't rule that out all the time. But as it stands right now, we are still in a bullish trend, right? And we might be just coming back into prior areas. So we'll continue to monitor that and see what happens. Now, another thing that I'm watching is obviously the risk ranges. And on day one, UUP, we're looking at that. That's a bullish, it's a US dollar index bullish fund. And you can see here it's almost at the lower end of the risk range on day one of this week. So to me, this looks like more of an accumulation area up to around the 50-day moving average to see if we start getting a move higher in the dollar. Okay, so another interesting take is, when the dollar gets hit, you typically see gold do quite well. And, gold has been performing well in a rising dollar environment. So if the dollar continues to fall, that could be very beneficial for gold. But I'm actually still looking at these risk ranges for gold. Gold has an upper range of just below 176. So we started moving up there. We'll see if it can continue to hit that or if it's going to take a little bit of breather here for the remainder of the week. Oil is another one that I want to pay close attention to. It continues to just tighten up, right? Low, higher low, higher low, higher low. And we have some lower highs, but really what I'm seeing here is right around 115 to 117, this prior area of resistance. You have some trap supply up in this area, and you can see it's clearly acting as resistance. So when the price comes up here, perhaps we get a little bit more of a downpull. But if this starts taking off, that's obviously going to put a lot of pressure, potentially more on transports, potentially more on the consumer, obviously, and where we can see things like retail continue to fall. If we keep continuing on, I'll look at XOP. So day one, it's up 4%, day one of the trading week, and that's almost at its upper range. And the reason why I'm showing this is because I'm looking at oil, and then I'm looking at XOP, which is a tradable fund here, which is the Spider S&P Oil and Gas Exploration Production. That's already almost at the top end of its range for the week, which could present an opportunity to take some profits or start to, it's hard to short this kind of stuff, especially in a bullish trend. But for, I guess, tactical traders, it's always a possibility. If we take a look at TLT took the back seat today, and it is forming somewhat of a bear pennant, right? It's going through this consolidation, but it is also putting in higher lows, which is positive. We really need to see it get back above the highs of these 2 days to get back up to that upper risk range. But as it stands right now, we are pushing more towards the lower end of the risk range right now, which tells me that, hey, day one, we're already here. The dollar's already at the lower end of the risk range. It tells me that, hey, these might be places to actually pay more attention to from the long perspective for the remainder of the week and maybe into next week. Now let's take a look at the SPY. SPY was up 1.87% today, coming into around that upper risk range, which we discussed on the prior video, just below that 405 region. I want to zoom in here so we can see a little bit closer. You can see here the MACD is kind of curling itself back over, which is a bullish sign, but RSI is still well below that 50 marker. I'd say pay attention to that little trend line right there in the RSI. If it starts cracking back above it, this has just been somewhat of a downtrend here, you can see. So if we start breaking above this, that opens the doorway, which we already discussed on the S&P 500 chart, the SPX chart, to potentially start shooting back up to that 50-day moving average, where we'd see some resistance up here. That'd be a very bullish. I'm not calling for that to take place, but that's always a possibility here. As far as that happening this week, highly, I just don't think that that's probable. I do think it's possible that we can try to come hit this upper risk range, but be mindful that like last week, we were coming up close to the risk range. It was like right around here, 415, and we missed it, and then it started sinking off. So, these bear market rallies, especially where we see these bump ups, but on low, cruddy volume, it's just not a healthy environment to be in. If you take a look at the S&P 500 on the 15-minute time frame, you can actually see just this downsloping trend line here. People might be calling that somewhat of a bull flag. We're right back above that 5-day moving average. The 5-day moving average is flattening out here. But yeah, there's just the risk to the upside for the remainder of the week is, a lot less than the potential downside to go retest those lows as it stands right now. So very complicated area to be in. If we take a look at the VIX, Volatility Index, my personal take here is it's going to continue to contract this week. I would like to see volatility come back down into around 26 down here, and then that's where I'd like to start putting on shorts, more aggressive shorts. But as it stands right now in the after hours, it looks like we'll see a little bit of a bump up come tomorrow or a gap up. So I would be just keep a close eye on this little trend that's trending up. And, as far as, where would you take profits if the S&P 500, is continuing to fall and you're shorting into it, or where we might get a bounce, I would start looking, at the upper trend line here to prior areas of this resistance here right around 34 and 35. So if we get a shot up like that, that's probably going to put a lot of fear into the market. If we see the VIX come up into this range over here, that's where I'd start to try to maybe play for a tactical bounce or, cover some short positions. Now, if you take a look at the Q's risk range, right? I didn't go over this one the other day, so I'm going to go over this risk range now. I want to go ahead and zoom in. It's just above 300 for the upside, and then on the downside, I have to zoom out. It's I don't have the number in front of me, but it's 278-ish, right around there. And if we start heading down, I'll give you the exact number here. Actually, you know what? I think I have it on my screen. Yeah, 276.38 is the low range. So let's zoom in here. You can see that we were up 1.66% and it's trying to get above this little prior high. And if it does, that opens the door to hit that upper risk range. But as it stands right now in the after hours session, it's not looking too healthy. So we need a little bit more data going into this week here, tomorrow, to see how the market reacts to that down 30% day there on Snapchat. If you take a look at the 15-minute time frame, we jammed right back to that 5-day moving average. We have a couple gaps above us, still declining 5-day moving average as it stands right now. So be very mindful of that. The trend still remains down, so you need to be tactical as far as this market is kind of just presenting itself more from the short side on moves up. And then if you want to play tactical bounces, that's always an opportunity too. If you look at the IWM, this one actually didn't do fare nearly as well. It was up 1.21%, almost an inside trading day, but we did click a little bit new of a high. So you can see here, I'd say that if we start getting above that 180, it opens the door. Now, that summation index, right, we're looking at, the New York Stock Exchange. It's a broad market. And, it'd be interesting to see the summation index flips, and that actually opens up the door for, like, small caps to perform a little bit better. We'll see here if that's the case. I'd still say we got to get... it's just in a horrible downtrend as it stands right now. So it's just nothing that I would be pressing, honestly, too hard with from the long side at all. If you look at the 5-day moving average, it's starting to flatten out. This could be very well a little inverse head and shoulders, but we need to get above 179, and that opens the doorway to fill this gap and hit that upper range right there. So that would be the level to pay very close attention to, 179. If you play the pivot, if you play a move out there, we'll see where price ends up, but you can have a stop loss there. But if price comes down, does something like that, then you might have a stop loss there. But 179 break opens the doorway for a higher move, potentially into this prior area of resistance in that upper risk range. Let's hop into Bitcoin really quick and close off the show. So Bitcoin, we broke down from this bear flag. It was looking somewhat strong up until just recently. We're just going sideways, right? We're just continuing to flag out sideways. And I did find something kind of interesting looking at like Tether. During this whole Luna kind of blow up, the stable coins became unstable and we saw the market really start to fall down. And I don't know if this is going to have an effect at all, but might be something to watch. I was paying attention to Tether here, right? We had that kind of shake up right here during the Luna, but it started to kind of just stabilize itself. But if you do look at like its market cap, some people have been paying attention to the market cap continues to just stair step down. So we'll continue to see like, hey, is the market cap continuing to fall here? And if so, what kind of effect is that going to have on cryptocurrencies? I don't know the answer to that. I pay attention to the Saylor to Schiff indicator right here. When we get a sell signal, I get out and boom, it's down to the downside. I'm waiting for this to uptick, get a new buy signal, but it looks like we're pretty far away as it stands right now. So we'll continue to monitor that and see what happens. All right, everybody, that's all I got for you. Really, just to wrap it up, pay close attention to both TLT or bonds, could be short end, could be longer end, and also the dollar being somewhat in a position where it's already reaching the lower end of the risk range. But then you also see things like the XOP coming up to its higher end of the expected move there as well. That's all I got for you in today's episode.